Happy Monday, traders, and welcome to the first trading day of December. Now, look, November did finish risk on Friday. Yes, we had just a half session after US Thanksgiving, but US equities, Dow, S&P, and NASDAQ all finished up around about 0.5%. But more importantly, that was the fifth trading day in a row that US equities were positive. So a very good lead into December. US equities at the moment just are not scared of anything. Seasonality is very good for equities in December. Ever since 1928, so almost 100 years, the US equities have finished positive in December, 73% of the time. So, very good numbers for seasonality for December. And of course, towards the end of the month, the market starts looking forward to the Santa Claus rally. S&P is less than 100 points away from record highs, so look, it could be there very shortly. Anyway, look, besides equities, the real news on Friday was what precious metals did. Precious metals are back ripping faces off. Silver leading. Silver on Friday, up over 5% in one session, up over $3. It smashed straight through record highs at around 54.5. And closed around the 56.40 area. So an amazing day for silver. It's very hard to forecast targets when anything is trading at record highs, but in the short term, no doubt silver bulls are going to start looking at $60. The way silver is trading, is it possible? Geez, I would say that it is definitely potentially a risky target. Look, gold wasn't up as much as silver, but yes, it had a good rally. The big news there is, and we talked about this before, it was trading in like a symmetrical triangle, and when it traded through 41.80, it technically was a bullish break of that triangle, and we saw gold end up around that 42.20 area on the close. Target-wise for gold is a lot more simpler than silver. The monthly highs for November around that 42.50 area, 42.45. So it breaks above that, then it looks like it's pretty much blue sky until those record highs at around that 43.80 area. So look, I would not be fading either gold or silver, because when they are on a tear, anything is possible. But certainly, gold and silver trading exceptionally bullish. Okay, so this week there's not a lot on data-wise, but one of the things that we're getting some noise and some headlines is that we might be closer to finding out exactly who the next Fed chair replacing Powell is. Powell, his term finishes in May of next year. It seems as if the interview process now is over, and the front runner at the moment seems to be Kevin Hassett. He is probably the closest candidate to Trump, and he's also known as a big dove. So market is starting to sort of question the independence of the Fed if he gets nominated. Look, if market does start questioning independence, potentially we might see some selling of the US dollar. In the currency space, my favourite pick there is the Aussie. Obviously when we're getting commodities, ripping, we've got risk as well, equities higher. Aussie's a risk currency, it likes that. But more than that is the fact that we've got an RBA now that cannot cut rates, potentially needs to hike rates, one of the only central banks that needs to do that, with inflation now almost at 4%. So hard to see Aussie lower. Certainly, I think we can get back above 66 cents at some stage in the short term. Okay, so this week data-wise, not a big week, but tonight we get some US ISM manufacturing data. it shouldn't really worry the market too much. Market's more worried about inflation and employment. On Wednesday, we do get some Aussie GDP data, third quarter GDP data. It looks as if the forecast for that's coming around about 0.7%. That's not a big number. And if we look at it per capita wise, it looks even worse. But again, just mentioned the RBA now has to contend with inflation up around 3.8, almost 4%. There is no chance of any rate cuts there. Moving along, Wednesday night we do get, or Wednesday in the US, we do get some ADP employment numbers for, and considering on Friday, because the US government shut down, we're not going to see any non-farm payrolls, so it's the last time we get a read of employment, or some sort of read before the Fed meets next week. But when you've got when you've got Fed fund futures pricing in almost 85% chance of a rate cut, it's hard to see this number moving that too much. And then just moving along, on Friday though is probably the key event risk for data. We get US PCE inflation data, which is the Fed's preferred inflation gauge. And market for that, we're looking for a headline around about 2.8%. We do have a Fed meeting next week, and as you said, market's looking for a slam dunk for a cut. Look, I don't think that this number will change whether or not the Fed cuts next week. That's pretty much baked in, but market is looking for back-to-back rate cuts. They're looking for a January cut as well. They're starting and wanting to price that in. So if this PCE does come in hotter than expected, I think we're going to potentially get maybe a hawkish cut by the Fed the following week. So pricing out that January. But obviously, if it's a good number, the market will be pricing in that January rate cut as well. So let's see. But yes, the event risk data-wise certainly is going to be Friday, and by all means, from the leads from last week, it looks as if the market is going to start the week risk on. So look, good luck with your trades, and we'll check back in with you shortly.